What does war have to do with your wallet? More than you might think. As tensions flare between Iran and Israel, global markets are on edge, and your investments could be feeling the heat. Let's dive into how this geopolitical chess game is impacting your financial future. First, let's set the stage. Iran and Israel, two longtime adversaries, are locked in a dangerous dance of threats and counter-threats. With each passing day, the risk of open conflict grows, sending shockwaves through the global economy. But how does this translate to your portfolio? Like a domino effect, one airstrike can shake your stocks. Watch how oil jumps every time tensions flare. It's not just about the battlefield, it's about the bottom line. Let's break down the immediate market reactions. Oil prices are surging faster than a missile launch, while gold is glittering brighter than ever. Stocks, they're as jittery as a cat in a room full of rocking chairs. Volatility is the name of the game, and your investments are along for the wild ride. But it's not all doom and gloom. Some sectors are actually thriving in this uncertain climate. Defense stocks are soaring higher than fighter jets, while energy companies are pumping out profits. On the flip side, tech stocks are taking a hit, and emerging markets are feeling the squeeze. Now, let's talk about investor psychology. Fear can be a powerful motivator, but it's rarely a good financial advisor. While some are panic selling faster than you can say geopolitical crisis, smart investors are positioning themselves for long-term gains. Speaking of smart moves, let's look at safe haven assets. Gold is shining brighter than a desert sun, bonds are looking more attractive than ever, and the US dollar is flexing its muscles. These traditional safe harbors are seeing a flood of cautious capital. But what does history tell us about wars and markets? Past conflicts have shown us that initial market shocks often give way to recovery and even growth. Remember, the stock market has weathered world wars and come out stronger. So, what should the average investor do? First, take a deep breath. Panic is not a strategy. Instead, focus on diversification. Spread your bets across different sectors and asset classes. Consider increasing your exposure to defensive stocks and commodities. It's also a good time to reassess your risk tolerance. Can you stomach the roller coaster ride, or do you need to dial back on volatility? This is where a good financial advisor can be worth their weight in gold, literally. Remember, investing is a marathon, not a sprint. While short-term volatility can be unsettling, it's the long-term trends that really matter. Focus on solid fundamentals and companies with strong balance sheets. Now, let's zoom out and look at the bigger picture. Geopolitical conflicts come and go, but the global economy marches on. Innovation continues, businesses adapt, and markets eventually find their equilibrium. That said, this doesn't mean you should ignore the current situation. Stay informed, but don't let headlines dictate your investment decisions. Use this time to educate yourself about global markets and how they interconnect. Consider this an opportunity to fine-tune your investment strategy. Are you overexposed to certain regions or sectors? Maybe it's time to explore new opportunities in emerging markets or alternative investments. One often overlooked aspect is the impact on currencies. As tensions rise, so does the value of safe haven currencies like the Swiss franc and Japanese yen. This could affect everything from your vacation plans to the cost of imported goods. Let's not forget about the potential for cyber warfare. In today's interconnected world, a digital attack could have far-reaching consequences for global markets. Is your portfolio prepared for this 21st century threat? On a more positive note, crises often spur innovation. Keep an eye on companies developing new technologies in areas like cybersecurity, renewable energy, and defense. Today's geopolitical challenges could be tomorrow's investment opportunities. For those with a taste for higher risk, the current volatility could present some interesting short-term trading opportunities. But proceed with caution. This is not for the faint of heart or the unprepared. It's also worth considering the potential for diplomatic breakthroughs. A peaceful resolution could lead to a rapid market rally. Are you positioned to benefit if tensions suddenly ease? On the flip side, be prepared for the possibility of a prolonged conflict. This could mean extended periods of market uncertainty and economic disruption. How would your portfolio fare in a drawn-out crisis? Let's talk about commodities beyond oil and gold. Agricultural products, rare earth metals, and even water could see significant price movements as global supply chains are disrupted. For those nearing retirement, this geopolitical turmoil serves as a reminder to reassess your asset allocation. It might be time to shift towards more conservative investments to protect your nest egg. Younger investors, on the other hand, might view this as a buying opportunity. Market dips can offer a chance to acquire quality assets at discounted prices. Just be sure to do your due diligence. Don't forget about the impact on real estate. Geopolitical uncertainty can drive investors towards tangible assets, potentially boosting property values in stable regions. Lastly, consider the human element. Beyond the numbers and charts, conflicts have real-world consequences. Factor in potential changes in consumer behavior, government policies, and global trade patterns. In conclusion, while the Iran-Israel conflict is certainly cause for concern, it doesn't have to spell disaster for your finances. Stay informed, stay diversified, and stay focused on your long-term goals. Remember, markets react, but investors must respond wisely. This geopolitical storm, like all others before it, shall pass. Your job is to navigate it with a steady hand and a clear head. Keep your financial ship on course, and you'll weather this storm just fine.